Saudi Arabia is selling oil to China in yuan, not dollars. Yuan, the Chinese currency. This isn't speculation, isn't rumor. It's happening, documented, confirmed through import data, through shipping records, through bilateral trade statistics. Approximately 20% of Saudi oil exports to China are now settled in yuan. That's roughly 1.7 million barrels per day at $100 per barrel. That's $170 million daily. 6 billion monthly, 72 billion annually in yuan, not dollars. This is the petrodollar dying, not theoretically. Actually, the 50-year agreement that underpinned American financial dominance, that created permanent dollar demand, that allowed unlimited deficits without consequences, is ending. Saudi Arabia promised in 1974 to sell oil only in dollars in exchange for American military protection. That promise built the system, made the dollar essential, made American power unchallengeable. And now, quietly, deliberately, strategically, the Saudis are breaking it, selling oil in yuan. And the implications are catastrophic for the dollar, for American power, for anyone holding dollar-denominated assets, expecting them to maintain value. Because when oil trades in other currencies, the dollar becomes optional, and optional currencies aren't reserve currencies. The petrodollar system was never about oil. It was about control, about creating artificial dollar demand, about ensuring America could print infinite money without inflation, without consequences. The mechanics were simple but brilliant. Oil is the most traded commodity on earth. Every country needs it for transportation, for manufacturing, for electricity, for plastics, for everything. And if oil is priced only in dollars, then every country must hold dollars, must earn dollars through exports to America, must accumulate dollar reserves, must buy treasury bonds. This created a closed loop. Countries sell goods to America, receive dollars, use dollars to buy oil. Oil producers receive dollars, invest dollars in treasury bonds, dollars return to America, funding deficits, funding military, funding consumption forever. It was the perfect system for America. Other countries worked, produced, exported real goods, and received paper dollars that America printed at will. And they accepted it because they needed dollars to buy oil. The petrodollar wasn't just monetary policy. It was impure, invisible, structural, permanent, until now. This investigation analyzes Chinese customs data on yuan-denominated oil imports, Saudi Arabian export statistics, bilateral currency swap agreements, Shanghai International Energy Exchange trading data, and the historical 1974 US-Saudi agreement. All sources documented in the description below. The petrodollar began in 1973. The October War Arab oil embargo, prices quadrupled. America faced crisis, inflation, recession, gas lines. The gold standard had already collapsed in 1971. Nixon closed the gold window. The dollar became pure fiat, needed new support, new demand mechanism. Henry Kissinger engineered the solution, traveled to Saudi Arabia in negotiated directly with King Faisal. The deal was straightforward. Saudi Arabia would sell oil exclusively in dollars, would not accept other currencies, would recycle oil revenues into U.S. Treasury bonds. In exchange, America would provide military protection, would arm the Saudis, would guarantee the regime's survival, and crucially, would not demand democratic reforms, would not question human rights, would support the monarchy regardless. It was a bargain, a fustian bargain perhaps, but effective. Saudi Arabia agreed, convinced the rest of OPEC to follow, and suddenly, every country needed dollars, not because of gold backing, not because of American productivity, because oil could only be bought in dollars. Demand became structural, permanent, artificial but real. The dollar was secure for 50 years, but empires don't last forever. Agreements erode, and the world changes. China emerged, became the largest oil importer on earth. 14 million barrels daily, far more than America. And China started asking questions. Why should we buy oil in dollars? We're the buyer, we're the customer. Why not yuan? The Saudis were polite. Referenced the agreement with America. The security guaranteed the relationship, but China was persistent, patient. Started building alternatives. The Shanghai International Energy Exchange launched in 2018. Futures contracts for oil denominated in yuan, convertible to gold. A direct challenge to dollar-denominated futures. Participation was slow initially, but growing. Russia started accepting yuan for oil. After being cut from SWIFT, after weaponization of the dollar, Iran did the same. Venezuela, Iraq, considering the precedent was set. Oil could trade in other currencies. The question was whether Saudi Arabia, the LYNCHPIN ... would follow. And in 2020-2 ... They didn't. If you're beginning to understand that the petrodollar system is collapsing, that Saudi Arabia is actively abandoning the 50-year agreement, that this isn't distant future but present reality, then you need to see what comes next. Subscribe now, because what follows reveals the domino effect, the countries joining, the mechanisms replacing dollar dominance, and why the Federal Reserve can't stop it, can't reverse it, can only watch as the foundation of American financial power ... crumbles. 1 UN denominated oil barrel at a time. December 2022. Xi Jinping visited Saudi Arabia. The timing was symbolic, deliberate, days after Biden had visited and received a cold reception. The Saudis were angry about Afghanistan withdrawal, about reduced military support, about criticism of the Crown Prince, about the pivot to Iran nuclear talks. The relationship was fraying, and China noticed, offered an alternative. Xi's visit was elaborate. 3 days, multiple agreements, over 30 bilateral deals signed, but one stood out. A framework for settling oil trades in yuan, not announced prominently, buried in. Meanwhile, China offered alternatives, massive infrastructure investment, Belt and Road projects, technology transfers, 5G networks, drone technology, and economic ties. China is Saudi Arabia's largest customer, buys 1.7 million barrels daily. And yuan for oil. So the Saudis decided the risk was manageable, that America wouldn't abandon them completely, that diversifying customers and currencies was prudent, and that the petrodollar system served American interests more than Saudi interests. So they broke it, not publicly, not dramatically, but effectively, permanently, irreversibly. The mechanism matters. How does yuan for oil actually work? China and Saudi Arabia have a currency swap agreement established in 2021. 50 billion yuan, approximately $7 billion equivalent. This allows direct yuan real exchanges without dollar intermediation. When China buys Saudi oil, Chinese importers pay yuan to the People's Bank of China. The PBOC transfers yuan to the Saudi Central Bank. CMA through the swap line. CMA converts some yuan to reals for domestic use, holds remaining yuan as reserves, or invests in Chinese bonds. Yuan-denominated debt. The oil flows to China. The yuan flows to Saudi Arabia. No dollars involved. The transaction bypasses the entire dollar-based financial system. Bypasses SWIFT. Bypasses Western banks. Bypasses American oversight. It's a parallel system operating alongside the traditional dollar system, and it's growing not just Saudi Arabia. UAE is doing the same. 25% of their oil exports to China are Iraq negotiating, Kuwait exploring. The Gulf states are diversifying, hedging, preparing for a world where the dollar isn't dominant, where alternatives exist, and where dependency on America is vulnerability, not security. Do you see the cascade effect? When Saudi Arabia trades oil in Yuan, it needs to hold Yuan reserves. Those reserves must be invested somewhere. Chinese bonds, Chinese assets, Chinese markets. That's capital flowing to China, away from America, away from treasury bonds. The Saudi Public Investment Fund now owns stakes in Chinese companies, ports, infrastructure, technology firms. The yuan accumulates, gets recycled into Chinese assets, exactly like the petrodollar recycled into American treasuries. The mechanism is the same, just the destination changed, and the implications cascade further. Other countries notice, if Saudi Arabia trades in yuan, we can too. Why hold dollars if oil trades in yuan? Why maintain dollar reserves? The artificial demand erodes, slowly, steadily, irreversibly. This is the Triffin dilemma playing out. To maintain reserve status, America must supply dollars, must run deficits. But those deficits create debt, create inflation, create loss of confidence, and alternatives emerge. The yuan isn't replacing the dollar completely, but it doesn't have to, just needs to capture 20% of oil trade, 30% enough to make dollar reserves less critical, less universal, less permanent, and the math becomes unstable, the debt unsustainable, the system fragile, and collapse becomes inevitable. Russia accelerated this. The sanctions in 2020 that proved dollar dependency is weaponization risk. Russia was frozen out of SWIFT. Billions in dollar reserves frozen, confiscated, and Russia pivoted immediately. Demanded rubles or yuan for energy. Refused dollars. Europe struggled, eventually agreed, opened UN accounts, bought rubles, paid in alternatives. The precedent was set, energy trades in non-dollar currencies, and works. Doesn't collapse, doesn't create crises, just bypasses America. And the system functions. Proving the dollar was never essential, was just entrenched, and can be overcome. Iran sells oil in yuan, has 4 years under sanctions, unable to use dollars. Venezuela exploring similar. Iraq negotiating. These are major oil producers collectively exporting millions of barrels daily and increasingly selling in currencies other than dollars. Each transaction chips away at petrol. Each barrel traded in yuan is one less barrel creating dollar demand, one less reason to hold treasury bonds, one less support for American deficits, and the erosion accelerates, becomes self-reinforcing. As more countries abandon the dollar, others feel safe to follow. The herd moves, and America ... watches. Powerless to stop it without admitting this system was always built on fragile agreements, not on economic strength, not on productivity, on deals that are breaking. The Shanghai International Energy Exchange is critical. Launched in 2018, offers oil futures in yuan, convertible to gold, called the Shanghai Crude Benchmark. Participation was limited initially, mostly Chinese companies, but growing by 2020-3... Trading volume exceeded 600 million barrels annually, not rivaling the petrodollar futures markets yet, but significant and expanding. The exchange allows non-dollar oil trading, provides price discovery in yuan, creates alternatives to WTI and Brent benchmarks. Both dollars. The convertibility to gold is strategic, addresses the concern that yuan isn't freely convertible, isn't fully trusted as a reserve currency, but convertible to gold that's trusted, universal, permanent. So the exchange offers a bridge, trade oil in yuan. But if you don't want yuan, convert to gold. That creates confidence, allows participation by countries uncomfortable holding yuan long term, And gradually, the exchange gains liquidity, gains credibility, becomes a viable alternative. And each barrel traded there is a barrel not traded in dollars, not creating dollar demand, not supporting the petrodollar system. What can America do? How does the United States respond to the collapse of the arrangement that funded its empire? The options are limited. Military force isn't viable. Can't invade Saudi Arabia, can't sanction China, too large, too interconnected, too critical to global trade. Economic pressure is weak. China is America's largest trading partner. Sanctions hurt both sides, and the Saudis know America needs them, needs their oil, is accelerating and spreading to other Gulf states. Then you need to understand what replaces it. Subscribe now, because the next investigation exposes the BRICS currency, the gold-backed alternative being developed, the payment systems connecting 40 countries, and how this isn't just about oil. It's about the entire dollar system, the treasury market, the deficit financing, the American standard of living, all built on the petrol. And when it ends, when oil trades in multiple currencies, when dollars aren't required, the adjustment is brutal. Standards of living fall, import prices explode, the wealth evaporates because it was built on paper, on arrangements, on a system that's dying, and you're either positioned for it or you're caught in it. The mathematics have decided only awareness remains. The numbers tell the full story. In 2020, 0% of Saudi oil to China traded in yuan. By 2020-2, 5%. By 2020-3, 20%. The trajectory is clear. By 2020-5, projections suggest 40%. By 2030, potentially majority. This isn't speculation. It's trend continuation, linear growth based on existing agreements and expansion plans. And Saudi Arabia is just the beginning. UAE see 25% yuan trade, Kuwait negotiating Iraq in talks, Oman exploring. Collectively, these countries export over 20 million barrels daily. If half trades in yuan eventually, that's 10 million barrels at $100, $1 billion daily, 365 billion annually. That's dollar demand gone. Treasury purchases gone. Support for the deficit gone. And this is just oil. China is negotiating yuan trade for other commodities. While simultaneously reducing dollar demand. It's a systematic de-dollarization strategy. Patient, comprehensive, and working. The Federal Reserve can't counter this, can't create oil, can't force Saudi Arabia to accept dollars, can't prevent China from offering yuan. The Fed's tools are domestic interest rates, key, bank reserves. None of that affects bilateral trade agreements. None of it prevents currency diversification. The Treasury Department has limited options. Can't sanction Saudi Arabia. Can't freeze Chinese reserves without triggering retaliation. The State Department can negotiate, can offer deals, but China offers more. And the Saudis know it. So American power built on the petrodollar ... has no mechanism to preserve the petrodollar, no lever to pull, no policy to implement. Just watching, hoping, pretending it's not happening. While the data accumulates, while the yuan trade expands, while the system that enabled American hegemony for 50 years ... dissolves one barrel at a time, one trade at a time, one day at a time. But here's the detail nobody discusses: the timing. Why now? Why did Saudi Arabia wait 50 years, then suddenly shift? Because the cost-benefit changed. America's security guarantee depreciated, became unreliable, came with criticism, with conditions, with uncertainty. Meanwhile, China's economic offer appreciated, became larger, more certain, more valuable, and critically, America's financial stability became questionable. 34 trillion in debt, perpetual deficits, inflation spiking then crushing through rate hikes, bank failures, political dysfunction,